Welcome back to Trade Talk, the show where we make trading simple, fun, and maybe a little less terrifying. I'm Emma.
And I'm Lily. Today, we're diving into one of the most reliable tools in the trading world, the Relative Strength Index, or as we like to call it, RSI.
That's right, RSI isn't just some fancy jargon. It's a momentum indicator that helps you know when to buy, when to sell, and when to just sit tight and sip your coffee.
Oh, I love a good coffee analogy. So grab yours, and let's get into the nitty-gritty.
Okay, let's start with the basics. RSI is a momentum oscillator. Essentially, it measures the strength and speed of price changes.
And it gives us a number between 0 and 100. So what do those numbers mean?
Let's break it down. If the RSI goes above 70, it's a sign the asset might be overbought.
That's like eating 5 donuts in a row, great in the moment, but you're going to regret it later.
Haha, exactly. And if RSI falls below 30, it's considered oversold.
Imagine someone who skipped breakfast and is running on fumes. They need some fuel.
So RSI gives us a way to see when the market might reverse or cool off. But how does it actually work? Let's get a little nerdy for a moment. The formula for RSI is RSI equals 100, 100. 1 plus RS, where RS is the relative strength.
Oof, that sounds complicated. Can we break it down a bit more?
Totally. Most traders use a 14-period RSI, meaning it looks at the last 14 candles on your chart.
It calculates how much the price went up during those candles versus how much it went down.
Exactly. And here's the best part, most charting platforms do all this math for you.
So don't panic, you're not pulling out a calculator.
Alright, now that we know what RSI is, let's talk about how to use it. When do we buy?
When the RSI drops below 30, the asset is oversold. Think of it as a clearance sale.
Exactly. Time to buy before the price rebounds.
And when do we sell?
When the RSI climbs above 70, the asset is overbought.
It's like a crowded party, time to leave before things get messy.
Perfect analogy. Let's throw in an example. Say stock ABC has an RSI of 25.
It's oversold, meaning the selling pressure might be overdone. You could buy here.
And for selling, imagine stock XYZ with an RSI of 80.
It's overbought, signaling that the price might pull back soon.
That's your cue to sell or take profits. Let's get visual. Picture this, a stock chart with the RSI plotted below.
The price drops sharply, and the RSI dips to 28. What does that mean?
It's a buy signal. The stock is oversold, and traders might expect a rebound.
Exactly. Now, another chart, the price is soaring, and the RSI spikes to 75. What's the move?
That's a sell signal. It's overbought, and traders might expect a correction.
These examples are why RSI is such a useful tool.
It gives you a second opinion before making decisions. You know, RSI kind of reminds me of a mood ring.
Oh no, here we go.
Seriously. When it's below 30, it's like the market's sad.
Crying, saying, please, someone buy me.
And when it's above 70, it's like the market's hyper.
Shouting, sell me before it's too late.
So what you're saying is, the market is just an emotional roller coaster.
Pretty much. And RSI is like our mood detector.
Now, RSI is powerful, but it's not perfect. It works best in ranging markets.
In trending markets, RSI can stay overbought or oversold for a long time.
Which is why you should always pair RSI with other indicators,
like moving averages or MACD, to confirm your trades.
Exactly. No indicator is a crystal ball, though.
Always have a plan and use proper risk management.
Alright, that's our deep dive into the RSI indicator.
It's simple, effective, and a must-have tool for any trader.
Don't forget to experiment with it in a demo account first.
And remember, practice makes progress.
If you found this episode helpful, be sure to subscribe, share, and leave us a review.
Until next time, stay savvy, stay balanced, and happy trading.
Background music fades out. But before we sign off, let's touch on some common misconceptions about RSI.
Oh, I love a good myth-busting segment. What do you have in mind?
Well, one common misconception is that an overbought RSI always means the price will drop immediately.
Right? Just because it's overbought doesn't mean you should panic sell.
Exactly. Sometimes the price can stay overbought for a while, especially in strong uptrends.
And the opposite is true for oversold conditions. it doesn't mean the price will shoot up right away.
Spot on, Lily. RSI is just one piece of the puzzle.
Another myth is that RSI can predict future price movements with certainty.
Yes. It's important to remember that RSI indicates market momentum, but not future price.
So using it in conjunction with other tools is always the best practice.
Absolutely. And speaking of tools, let's discuss a few strategies to enhance our trading with RSI.
Ooh, I'm all ears. What do you have in mind?
One strategy is to look for divergences. If the price makes a new high but the RSI does not, that's a bearish divergence.
And if the price makes a new low while RSI holds up, that might be a bullish divergence, right?
Exactly. These can be powerful signals for potential reversals.
And don't forget about combining RSI with trend lines.
Yes. Drawing trend lines on the RSI itself can help identify breakout points.
It's like having a roadmap for your trading decisions.
Exactly. And always remember to keep an eye on market news and events.
Right? News can impact price movement significantly, even if RSI says something different.
Great point, Lily. So, to wrap things up, RSI is a fantastic tool, but context is key.
Use it wisely, combine it with other indicators, and always stay informed.
That's the spirit. Thanks for sticking with us for this extended edition of Trade Talk.
We hope you found it insightful and entertaining.
Until next time, stay savvy, stay balanced, and happy trading.
Background music fades out.
Now, let's take a moment to discuss how to keep learning and improving your trading skills.
Yes. Continuous learning is key in the trading world.
You might want to consider joining trading communities or forums.
That's a great idea. Sharing experiences and strategies with others can really enhance your knowledge.
Absolutely. Plus, attending webinars or online courses can provide valuable insights.
And don't forget about reading books on trading psychology and market analysis.
Right. Understanding the psychology behind trading can help you make better decisions.
It's all about building a solid foundation for your trading journey.
Exactly. So, as you explore RSI and other tools, keep educating yourself.
And remember, trading is a marathon, not a sprint.
Well said, Lily. That's a wrap for today's episode.
Thanks for listening, everyone. Until next time.
Background music fades out.